Hello everyone, Dave Landry here from DaveLandry.com, and this is Trading Simplified. So what do we talk about? Well, I'm going to talk about a lot of things we talked about last week because I think it's very important. And that's because the market is doing some very interesting things that could be rolling over in here. I don't want to get too bearish. I don't want to label myself. But I think it could be rolling over. So I think it's important for me to continue to update you on that. And as I said last week, there's a lot of other great people at StockCharts.com doing market updates, and I also do the Market in a Minute every day. I do a daily trading service where I do a deep dive into the markets, a little short video, which becomes a short video every night, about 5 minutes for my clients. So I don't feel the need to do a lot of market updates unless there are some signals triggering, or we could be losing steam, or could be in some sort of transition mode. I think we are in that type of situation now, so we need to pay careful attention. And I want to continue my discussion on if I can do it, so can you. Show you some fairly simple things that I do exactly how I do them, and I think if I can do it, so can you again. So one thing I do want to show you this week is letting the ebb and flow control your portfolio. Sometimes I might seem like I'm getting a little bearish, and that's basically just listening to the database, which I'm going to touch upon in a few minutes. Also, go in and watch last week's show. We talked about that quite a bit. You don't want to necessarily bail out on everything because sometimes positions continue to run. I have a couple of new mystery charts, and I want to follow up on some of the old ones. And then I want to introduce you to something slightly more advanced. And lately in my weekend charts, where I do get a little bit more advanced with certain techniques, I talk about things such as opening gap reversals, which is becoming one of my profit centers. And that'll make more sense when we get to it. By the way, I do take requests. If there's something you want me to cover, let me know. You can reach me at DaveLandry.com/contact. If you want the slides from this show and my books for free, I'll give you all 3 of my books for free. And limited access to the members area and market timing course and a bunch of other stuff. Go to DaveLandry.com/StockCharts. Now, I want to do, again, a brief market update with some lessons. And like I said last week, borrowing a line from Linda Rasky, and she said she got it from somebody else, probably on the floor, the market will often do the most obvious thing in the most unobvious manner. And that means if it's going to roll over, it's going to have a big rally first. Now, we're looking at the S&P 500 here, and this is the ACP indicator. By the way, my plugin is free. Just like this video if you're watching it on YouTube, and you'll get the plugin for free on StockCharts.com. And what it shows below is the number of days, not the magnitude, but the number of days that the bow tie moving averages, 10 simple, 20 exponential, and 30 exponential, have been in uptrend proper order, meaning that the 10 is above the 20 and the 20 is above the 30. And you can see that when the moving averages began to come together a little bit, that the indicator turns yellow, meaning that they're no longer in uptrend proper order. Not the end of the world, but a bit of a caution, and that's why I had the programmer make it yellow for me. I thought that was kind of cool. Green light, red light, yellow light. So now we turn back to uptrend proper order, meaning that the 10 is greater than the 20 and the 20 is greater than the 30. Here's something interesting though. If you look at the peak of the market and go back and look at the 2 prior peaks, you can see that it's losing some steam in here. It looks like it's kind of rolling over. And this is what classical text on technical analysis would call 3 drives to a high. Now, 3 drives to a high, I wouldn't use that in and of itself because it might be 4 drives to a high, or there's always going to be likely 3 drives to the high at the top of the market. But this signal does happen fairly often in uptrends. What you need to pay attention to, more importantly than that, is the market losing steam? Now let's take a look at the NASDAQ composite. Looks a little bit worse than the Ps, but you can see it was in a nice uptrend for a long time. Bow tie moving averages were in proper uptrend order. We had a bit of a caution period where it looked like it was kind of beginning to roll over in here, but it's pulled back a little bit. But now the moving averages have been in downtrend proper order for a while in here. So NASDAQ looking a little bit questionable. As I've been saying quite a bit, it would have to go back to new highs for me to feel better about the NASDAQ. So you see kind of a bit of a rollover in here. Kind of has an inverted cup and handle look to it. So that's a little bit concerning in here. Now, the thing that's very important in markets, and this is probably one of the first things you should ever do, is look at the net price change of any market. Where is it today? And then look back in time and find a similar price level and see how far back in time you can go. So this market hasn't made a whole lot of progress in 2021. In fact, it's not too far from going negative for the year. So that's a little bit concerning, the fact that we've lost some steam in here. Take a look at the Russell 2000, which has been in a really nice longer term uptrend, as evidenced by the big blue arrow, of course, and then the bow tie moving averages being in uptrend proper order, 10 greater than 20, 20 greater than 30 again. We had a little bit of caution in here as this market lost a little steam, but then it went on to make new highs. And once again, it's green. So green means good, right? Tarzan speak, as we talked about Tarzan quite a bit in prior presentations. Well, let's pay attention to what's going on here. We had a pretty serious sell-off yesterday, and that puts us below the moving averages. Now, you'll notice that all three of those moving averages turn down. Sometimes that simple moving average, the 10, takes a little while to turn down, but as I learned from Greg Morris, with an exponential moving average, it doesn't matter if it's a 10 period or a 1,000 period, it will turn down as soon as the market closes below it. So we could get a crossing fairly soon. Notice this peak back here, and notice our recent peak. The recent peak isn't much above that, so it does look like it's certainly losing a little bit of steam. And of course, the most simplest thing of all, what's the net price movement? We're about 217 yesterday, and you go back in time, you can see that we were there earlier this year. So the sideways arrow, the big blue arrow, is pointing a little sideways as of late. Not the end of the world just yet, but certainly something you want to pay attention to. So is the Russell becoming rusty? Now, we talked about the semiconductor index last week, and the most obvious thing in an unobvious manner would be for it to roll over, but the unobvious thing would be for it to have a rally first. So let's take a look at it longer term. You can see nice uptrend longer term here, as evidenced by the proper order. It did have a little bit of yellow, but for the most part, it stayed green for a long, long time. Now, in more recent times, you can see it has lost steam. The net price change is unchanged for about 3 months in here. And you can see we've had a bit of a rollover. Notice that the bow tie moving averages did come together and cross over, giving us a sell signal. But what has it done so far? It's actually rallied up a little bit. Now the moving averages are meandering. But this market looks like it's in trouble. It's just taking its own sweet time to roll over. And hey, here's the deal. I hope the markets go straight up forever. It's a lot easier for me to make money on the long side. I just have to believe in what I see and not in what I want to believe. So it's kind of an obvious rollover, and it's probably going to do things in an unobvious manner. Now, biotech, a lot more obvious. You can see we had a bow tie here. It switched over fairly quickly from green to red. Go in and watch the presentations that I've done on bow ties, and they come up fairly often, especially when the market's in a transition mode like this. So we had a sell signal here, and then so far we've had a deep retrace. Like last week I talked about retail. The problem with the short side is you get short and you're feeling great and you make a lot of money, and then all of a sudden you get a massive retrace rally, knocks you out, of course, and then the market turns right back down. So for short side, it can be a little frustrating. Hard way to make money, easy for me to say, but the reason I like to short, not just because you can make money doing it in down markets, is because it helps me to see both sides of the market. As I say quite often, my friends who run a lot of money and are long only oriented tend to always see the market as glass half full. So it looks like biotech's in trouble. Had a big sell-off on Tuesday. It looks like it's trying to head lower. Believe me, they're not going to make it easy on us. It's going to be a bumpy ride. Now, let's pop into the mystery charts and talk about the methodology in action. If you go back a couple of weeks, we talked about the TKO and Mesa Airlines. Nice obvious trend and a nice sharp sell-off. The knockout knocks out the nervous Nellies. In fact, it knocks out some trend followers too. I was in one yesterday, which is today's mystery chart, and it's knocked me out of my long position. And if you're long a market and it knocks you out, there's a good chance that that TKO is significant enough. Remember, trend knockout, you want longs to get knocked out, you want some shorts to get sucked in, and then we come in and take advantage of the predicament of these traders. And one of those traders was actually me yesterday. So let's take a look at what happened. You can see entry above the high, stop below the low, like we said last week. And it's just a quite simple calculation. You just take the entry plus the entry minus the stop, or the risk if you want to look at it that way. Add that to your entry, and that gives you your initial profit target. I do have a spreadsheet available, and I think there's a link in that davelandry.com/StockCharts URL if you need the spreadsheet to do this automatically for you. And I'll show you that spreadsheet in just 1 second. So anyway, you broadcast the risk up. That gives you the initial profit target. So let's do a follow-up on this former mystery chart. Again, nice uptrend, the TKO, entry, stop, initial profit target. Let's see what happens. You can see we trigger into it with a lot of vigor, and it runs up and hits the profit target within 3 days. Now, don't get me wrong, I love it when we hit the profit target quickly, but usually when they hit the profit target this quick, it's hard for the market to sustain that move. And quite often you get stopped out. So we hit the initial profit target, our stop goes to break even, and then let's see what happens. And we got stopped out. Well, this is what I call better than a poke in the eye trade. You make money on the first loaf and you scratch out on the second. Now, if we take a look at it in the portfolio, you can see that there was a 1% gain. That's what we're looking for on the first loaf, so to speak, first half of the trade. We put on all shares at once. So in this case, 666 shares. Round that up or down, depending on whether you want to be a little bit more or less aggressive. And for tracking purposes, I divide it in the spreadsheet into 2 loaves, so to speak. Somebody asked me why I call it loaves. I don't know. I worked for a hedge fund, and the guy for like 14 years as a consultant, as a head of technical analysis, and he called everything a loaf. So that's where that came from. Anyway, you'll notice a small loss here. It did have a bit of a gap lower, and I got out actually a little bit lower than that because I was busy with other positions on the open. But anyway, long story endless. The reason there's a little loss in here because it was a gap, and I used a fairly liberal fill on that to make sure we're being honest. But I think some people got out a little bit higher on that one. But anyway, if you are to look at that, it's better than a poke in the eye on the trade. If you make 0.8% on every trade, you're doing pretty good. And let me show you the math on that. $1,000 first loaf minus, should be 117 on the second equals 823. So it's 0.823% on a 100,000 account. So that's not bad. Better than the poke and the eye. The swing trades that don't work out as longer term trades, in other words, you make $1,000 and scratch out, 1% scratch out, whatever the case may be, they're not going to make you rich, but they help to keep the lights on. They help to keep you in the game for the occasional big home run. So this one here made roughly 1% of the first loaf, and open profits at the time of the snapshot were 17,000. So that's a 400% gain. That's where the money is. That's what we're going for. We're not going for these little swing trades, but they're pretty nice when they work out as swing trades because you know you're getting closer and closer to that big trade and you don't have to book a loss. Now let's reveal a mystery chart from last week. Kohu, this was a recommendation in my trading service. You can see it wasn't a longer term uptrend with the proper order and the moving averages, but you can see it lost steam. The peaks were not as impressive. In other words, the second peak in here were not much above the first peak, and you can just kind of eyeball it, see it rolling over. Bow tie down, also cup and handle type of situation, inverted cup and handle that is. And here was the recommendation to sell short in my trading service. So let's see what happened. As you can see, it just began to kind of rally up in here, and it didn't trigger. So I took it off as an official setup. Now, this doesn't mean that this stock isn't going to continue to roll over. It still looks like it's in a lot of trouble. On the short side, I usually like to see them trigger as soon as possible because that catches the most people off guard. A lot of my clients save the old Landry list, and I recommend you do that too. And that way, you'll notice a lot of these stocks, you can build your momentum list, build your possible short list longer term, because sometimes these things don't just trigger right away. They don't work exactly on my time frame. Now, CrowdStrike, another mystery chart in here. I played this one for a little bit on the short side with puts and I didn't really make much on the trade. But again, like the previous chart, the Kohu, it still looks like it could be in trouble longer term. Again, longer term uptrend here, but then it begins to roll over, lose some steam. Look at your net. Although the proper order turned green, you could see the stock began to lose some steam. And I'm going to show you a few more examples using this ACP indicator, Landry proper order. And it's a great tool, but don't forget to look at the charts. And that's why I always look at a blank chart first before I put on any indicators. And the only indicators I put on are moving averages. You can see kind of that 3 drives to a high thing. Don't get too caught up in that. Do pay attention to the net movement. Do pay attention to whether or not the peaks are losing a little bit of steam. But you can see turn yellow, turn red. The bow tie is here. And it begins to roll over. And the pullback completes the pattern. And again, I played puts on this and shorter dated puts, and I was kind of expecting the market to implode. I think I made a little bit of scratch out of the trade. It wasn't nothing to write home about for sure. Zen was another one of the mystery charts. Same sort of action going on there too. Longer term uptrend, proper order of the moving averages, or uptrend proper order. But then what happens? It loses steam, begins to roll over. You can see this one flips over pretty quickly to make a little bit more of a textbook looking bow tie, meaning that the moving averages come together and spread out quickly, give the appearance of a bow tie. And you can see that a little bit of pullback here, a little bit of sell-off, then it came back up. This was another one I played short dated puts on, and again, not much to brag about on that. I made a little bit, rolled them down, and then I think lost money on the remainder. Now we got a new mystery chart this week. As you can see, it's a relatively new issue, still considered an IPO, the way I look at it. Nice longer-term uptrend, accelerating higher. Nice TKO type of move. In fact, I got stopped out of this one. So the entry around 27, stop at 22. Broadcast that up. Additional profit target 32 on that one. We'll follow up with that one in coming shows. Here's another mystery chart. This is actually a short. Here's another mystery chart. It's actually a short. You can see, again, was in a nice longer-term uptrend, like some of the prior examples. But then what happens? Well, it makes a new high, which is a little bit higher than the prior high, but then it comes back in, and you can see the moving averages begin to come together, and it rolls over. So that's a bow tie to the downside. A little bit of a pullback completes the pattern. Now, this one hasn't triggered, and it's quite a few days in the pullback, so I may pull this off of my trading service if it doesn't trigger really soon. Again, I like shorts to trigger as soon as possible, but this one sure looks like a major top, so I'm sticking with it for a little while longer to see what happens. And your parameters on this one, 138 entry, 153 stop, and an IPT of 123. Now, I want to talk a little bit about ebb and flow. And as I alluded to earlier, a lot of times when people sense that I'm getting a little bearish or I'm talking a little bit about what's happening in the markets, a little concerned, they're like, well, Dave, let's just exit everything. It's like, well, you could do that. And every now and then that'll work great. Unfortunately, if you do that and the market goes straight back up, you're going to miss being along for the ride. Also, sometimes individual issues, like we have one little oil field stock, although they got whacked yesterday, as you'll see, we're still hanging on to that one, and that might turn into 1,000% gain. It was up as much as 500% at one point in time. So I like to let the ebb and flow control my portfolio. So if we go back about a week in time, you can see the open portfolio looked fantastic, 38,578 in open profits and swing trade profits. And again, here's that big winner, 489% at this particular point in time. And notice that we were long only in this particular portfolio, again, about a week ago. So you can go back in and look at the archives and see this exact video that I grabbed this screenshot from. 1 means long, -1 means short. And this is the spreadsheet that I'll give you if you want to track your own stuff. If you look on the left-hand side of the charts, on this particular day, I could only find 2 longs, and they both were in oil and gas, so it's not a whole lot to get excited about. And everything else was short. So 2 longs and 34 potential shorts. And believe me, I spent about an hour and a half whittling down those shorts, hundreds of shorts, to get them down to 34. So that's the listening to the database I talked about last week. If it's giving you a plethora of shorts, then you need to be shorting. And people say, well, Dave, well, how do you listen to the database? Like, well, what I do is I look at about 2,000 stocks every night. I have very loose parameter scans, which show me these pullbacks, and it might be upwards of 2,000 stocks. And that gives me a really good feel for what's going on. Go in and watch last week's show for a little more than that. So here's a Landry list coming in today. I have it blacked out as a courtesy for my clients. But you can see that we had a few shorts in the list and a few longs in the list. And if you look at the portfolio, you can see we took a bit of a hit over the last week. And at one point in time, I want to do a show on the pitfalls of trend following. Well, first of all, the only way to ever make money in the market is to capture a trend, period. And that's a different discussion altogether. But if you think about it, you have to sell higher than you bought, or you have to cover lower than you shorted. I know, a big duh, but you'd be surprised at how many people will fight trends. But anyway, if it's completely whited here, that means we stopped out. Again, there's that message trade we stopped out of. We also stopped out of CLB yesterday. We didn't make a fortune on that, better than a poke in the eye. Whenever a client complains about giving up open profits and they still make a profit overall, I tell them to send me the money, keep enough out to get a massage so you can center yourself and forget about that troublesome cash. And in 30 years, nobody's ever sent me any money. So we have 1, 2, 3, 4 longs left. 2 of those longs, again, we got stopped out of, so it was 6 longs coming into today. Now we only have 4 left. So it was 6 longs going into yesterday, March 23rd, and now we only have 4 longs left. So we're beginning to reduce exposure on the long side through allowing ourselves to get stopped out. Not that we want to get stopped out, but we're honoring no stops. And now we have 1 short on. The problem with the short side is it's darned if you do and darned if you don't, and it goes really quick. If you don't put on a whole bunch of shorts as soon as the market rolls over, you're not going to make any money, and you're certainly not going to protect yourself from all your longs that are stopping out. However, if you do put on a plethora of shorts, that unobvious thing in the most unobvious manner occurs. The market has a big rally, knocks you out of all your shorts, and then of course it rolls over, and that can be quite frustrating, believe me. Okay, let's shift gears for a second. I want to show you something I did yesterday. One of my favorite things to do as far as kind of a fun thing to do in the markets. I know I'm a nerd, but it's a little bit more advanced. So let's talk about trading slightly more advanced. Lately, I've been talking about profit centers in my weekend charts, which is every Thursday, by the way. Check my website on Thursdays. I do a show on Thursday nights. You can come and ask questions live. Those shows are still live, and I'll be happy to address your questions on trading. Anyway, a profit center is, as I defined it, an ancillary profitable technique. Profitable being the key word in that sentence. Ideally in non-correlated markets to your core methodology. The real money is making that 400 or 500% trend following, okay? But if there's some things you could do ancillary to that and make a little money, then I think it's worth a shot. So ancillary profitable techniques, ideally in non-correlated markets or non-correlated to the core methodology. One of my favorite things to do, again, is these opening gap reversals, or as we call them, ogres. The stock or the market must be in a strong uptrend. The stock has to be at all-time highs or at least multi-year highs, and ideally set up as a pullback or a TKO. And that'll make a little more sense in 1 minute. But if you go back to that mystery chart, if today that stock gap's open, I might play it as an opening gap reversal. The stock must have a significant gap lower based on its volatility. I scanned for at least 5% gaps. I don't know how to do this yet with StockCharts, but if one of you guys knows how to do it, leave a comment below for me and for everyone else for that matter. And as I've said recently, StockCharts has been very accommodating in helping me get the tools that I need to get my job done, or get you the tools that you need to get the job done. So you want to look to go long on an intraday breakout. Now your initial profit targets and your protective stop should be adjusted based on the stock's volatility. Ideally, you want to survive the low of the day. So here's one of my favorite examples, going back in time a little bit. You can see this stock was accelerating higher, and then it just absolutely got creamed overnight. But it found its low fairly quickly and began to rally. It rallied over 10 points during the day. Now here's CPE. I was actually long this stock, and I bought more yesterday. I wasn't averaging down. I was playing this little opening gap reversal. But you can see nice accelerated trend higher, nice little pullback, little TKO. And then yesterday it gaps lower. It made a nice little reverse. So let's take a look at that trade on an intraday basis. The stock gaps lower, sells off a little bit, and then it begins to implode in earnest. Now this is a 15-minute bar. So at this point, I'm thinking an entry up here to make sure it's truly reversed at 33.53 would require about a 2-point stop at least on this particular position, which will give me a 2-point profit target up here at 55.53. Now the stock has a big reversal and then begins to trade sideways for a while. And as you can see, it triggers, rallies up, and then begins to come in. Now let me show you how I played this. The stock was rallying nicely, so I was trailing my trailing stop higher, but it just couldn't seem to get to the initial profit target. So I ended up moving my stop up nice and tight on half of the shares as opposed to using a limit order to exit half. And then when it began to slide in the remainder, I stopped out of the remainder of the position. So I was looking for 2 points, and this was not a spectacular trade by any stretch of the imagination. But 400 shares on a 100K account, or for every 100K, 400 shares, however you want to look at that across multiple accounts, it's better than a poke in the eye for the day, a couple $100. Annualized, that's not bad. Does it work on the short side? Yeah, it's not my favorite thing to do, but if the market's in a lot of trouble and headed lower, and you have a stock gap higher like Zen, this is a bit of a dated example because the market was selling off at this particular point in time. Nice gap higher, and you can see it imploded on the day. Again, I prefer to play the upside, but on the downside, there is occasionally opportunities with the opening gap reversal. So, by the way, I do have a Facebook group. You have to be a gold member of DaveLandry.com. It keeps the riffraff out. I'm kind of half kidding. But it's pretty good. Like some of these ogres I'll throw out in the Facebook group. Sometimes we talk about IPOs, and then the other guys and girls are quite active there. Well, that's all my time. If you need to reach me, DaveLandry.com/contact. And again, DaveLandry.com/StockCharts. I want to thank everybody for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.